Banking, Housing, and Urban Affairs will come to order. Thanks to the three witnesses, some traveling long distances to be here in person. We do these hearings pretty much, I would assume, will continue for at least a while to do them hybrid. So witnesses sometimes call in from Seattle or Philadelphia or somewhere else, and members still can cover more hearings this way. We'll ask questions from their offices. Many will be here, and we will see how that goes. 43 million Americans are drowning in 1.75 trillion, that's $1,000 billion in student debt. That debt prevents generations of Americans from pursuing their dreams, seeing their hard work pay off. It holds people back from buying a home, starting a business, getting married, starting a family. Earlier this week, this committee held a listening session to hear from workers about how student loan debt has impacted their lives and how it's undermined the dignity of work. We heard about how borrowers face impossible choices between doing the work they care about and trying to pay off mountains of student debt. Megan Bailey, a social worker in rural Montana, realized that to afford college, either she would be saddled with enormous debt or her parents would be saddled with enormous debt, therefore jeopardizing their retirement. She took on the debt herself. She now owes more than $200,000. She sacrificed her financial future in order to make sure her parents could retire. That's a choice no one should have to make. It really wasn't supposed to be like this. Taking on debt to pay for college is an investment in your future, they tell us, an investment that pays off in the long run with a higher paying job and a promise, perhaps, of middle-class stability. It's what we tell people about the American dream. Work hard, play by the rules, you'll get ahead in life. It's what Ray from Toledo in my state believes. She thought if she took on debt to go to college, if she worked hard, if she dedicated herself to public service, she'd get ahead. Instead, she's paid $96,000 on $75,000 in student debt she owed. She's nowhere near being done with these loans despite having a job and working hard every day. The overwhelming number of borrowers do play by the rules. They do work hard. Go to college? Check. Get a job? Check. Work hard every day? Check. But instead of achieving the American dream, borrowers are trapped in debt and economic instability. The debt trap, as we know, is even worse for Black and brown Americans. 90% of Black students, 72% of Latino students borrow to attend college, 66% of white students do. It's not an accident. This cycle of debt is a direct result of bad federal and state policy. We haven't invested in public education the way we used to, pushing tuition higher and higher, pushing students to take on more and more debt. 2020, more than half of all bachelor's degree recipients from public and private four-year institutions graduated with student debt and owed an average of $28,000. The days that some of us remember are long gone when hard work at a part-time job could put you through school. Too many of the debt forgiveness programs that students are told they'll be able to count on are mismanaged, or in some ways not really even managed at all, by student loan servicers. The income-driven repayment program is supposed to erase eligible borrowers' debt after making enough payments. It's canceled the debt of 32 out of 4.4 million Americans who are eligible. That's not 32%. It's not 32,000. It's not 3,200. It's 32 people out of 4.4 million. Many of these borrowers have been enrolled in making payments for 20 or 25 years. According to a recent NPR report, loan servicers failed to properly count qualified payments and did not accurately track borrowers' progress towards cancellation for millions of people. These are some pretty big mistakes. We created this program to protect people from being trapped forever in debt. It's not working. Congress created another program designed to forgive student loan debt, the Public Service Loan Forgiveness Program. We promised these students, if they dedicated 10 years to public service, generally at modest compensation, we know, teachers, nurses, firefighters, their loans would be forgiven. Yet because of poor servicing, and there's no other way to describe it, 98% of eligible borrowers are rejected for public service loan forgiveness. 98%, and the great majority of them thought they were doing things right. They paid every month for 10 years. One of these was rejected was Deborah Harberger from Maryland. She's been a social worker for the state of Maryland for more than 18 years. She should have had her debt forgiven 5 years ago, yet she was rejected for public service loan forgiveness in 2017. 5 years of monthly payments that could have gone to her savings, her retirement, her college savings. Service mismanagement, particularly these two programs, has led to borrowers having larger debt for longer periods of time. Biden administration recently implemented a temporary PSLF waiver to allow rejected borrowers to reapply for forgiveness. That allowed Emily Robinson, a teacher from Georgia, to finally have the remaining $22,000 for her student loan debt forgiven. She taught 17 years. She was rejected once before for loan forgiveness. She told us she finally received her Thanksgiving miracle when all her student loans were forgiven. She said when she saw the remaining balance on her loans at zero, she started to cry. Think of how imagine how she thought then. She says she can now start saving for retirement after 17 years serving the public. So that was an important first step by the Biden administration, but it's not enough. The Biden administration has the power to change the financial lives and future of millions of borrowers by forgiving meaningful portions of student debt. CFPB has a role here as well. Student loan servicers need to be closely supervised to ensure that borrowers receive the forgiveness they've earned through the programs that Congress established. Under the Trump administration, CFPB was not concerned with the average worker. We know that. We saw that. We've seen that in reality at the time, and we've seen it proven since. But under the leadership of Director Chopra, CFPB is finally working to hold these servicers accountable. Americans shouldn't be trapped by a system that was supposed to be an opportunity to work their way into the middle class and really understand the dignity of work. I call on the administration to think about Emily and Ray and Megan and Deborah, worked hard their entire lives, still drowning in debt. You have the power to reform this broken system, to give people power and agency in their lives, and to unleash the potential of future generations in this great country. Senator Toomey.
Thank you, Mr. Chairman, and welcome to our witnesses today. When Congress created universal student loan programs, it didn't call them student grant programs. In fact, there are separate grant programs like Pell for low-income students. But Congress created the student loan program with the same expectation as any other loan program, that the loans would be paid back. Now, some of my Democratic colleagues clearly want the president, despite his lacking the legal authority, to cancel many of these outstanding loans, effectively converting them into grants of potentially tens of thousands of dollars per borrower. So let's be clear about what canceling student loan debt means. It's a massive wealth transfer from taxpayers to a small subset of mostly wealthy individuals. First of all, fewer than 1 in 5 American adults even have federal student loan debt. That means that 210 million American adults have no federal loan debt. So why do 80% of American adults have no student loan debt? Well, many of them never went to college. Or they went to college, but they didn't take out student loans. They just paid as they progressed. Or they took out student loans to pay for college, and they paid them back. Second, individuals with a bachelor's degree or higher overwhelmingly make more money than people who don't have those degrees. The vast majority of them are perfectly able to repay their loans. They have significantly lower unemployment rates, and on average, they earn $1 million more over their lifetime than non-college graduates. Third, student loan debt is primarily owed by wealthy families and graduate students. Even the Washington Post's left-leaning editorial board has blasted the president's plan as a transfer to the wealthy. They wrote, and I quote, "A broad cancellation would offer huge, undeserved benefits," end quote, to individuals in high-paying fields. And they correctly pointed out that, quote, "the vast number of American taxpayers lacking university degrees would subsidize well-heeled white-collar professionals," end quote. Now, all student debt is obviously voluntarily incurred. Over half of all student debt is taken by graduate students, many of whom happily incur the debt because they're entering high-paying fields like business and medicine and law. Of course, some graduate students have degrees that are not highly valued by the labor market. As the Wall Street Journal wrote, and I quote, "Doctorate recipients in the humanities in 2019 earned $53,000 on average. Machinists make more," end quote. But this begs the question, why should a machinist ever have to pay off the loans of an art history PhD, let alone a medical doctor? Beyond being a massive wealth transfer to the well-off and well-credentialed, student debt cancellation is grossly unfair to every other American. Frankly, it's a slap in the face to the machinist, to the taxpayer, to anyone who didn't go to college, and to anyone who works for a living making financial sacrifices so they can pay their own or their kids' college bills that they saved instead of going on vacation or splurging on gadgets. Those people don't have student loans, but they've got other debt. Should the government cancel their mortgages, their car loans, their credit card bills? Of course not. It's almost never acceptable for the taxpayers to be forced to be responsible for someone else's voluntarily incurred private debt. Cancellation of student debt obscures the root cause of the problem here, and the root cause of this problem is the outrageously high cost of higher education. For decades, the government showered students with cheap debt and grants to go to college. With government paying so much of the cost, students were largely indifferent to the price. Understanding that price didn't matter to their customers, colleges responded by raising tuition. According to a study by the New York Fed economists, anytime there's an increase in the amount that a student can take out for a federal subsidized loan, 60% of that increase is passed through as a tuition hike. The solution is obvious here: less government subsidization and more personal responsibility. But it seems some have forgotten these immutable economic truths. Colleges have little incentive to keep prices reasonable if they believe government will cancel the debt used to pay for the tuition. They've already demonstrated that they are willing to raise prices at multiples of the rate of inflation because they can. If government starts canceling everyone's debt, then we can expect another surge of higher education inflation. With the government expected to issue roughly $1 trillion in new student loan debt over the next decade, we'll soon be right back in the same position. Let me conclude by dispelling an argument that you may hear today that student debt cancellation will somehow ease inflation. The opposite is clearly true. Through May 1st of this year, the Nonpartisan Committee for a Responsible Federal Budget, or CRFB, estimated that the COVID student loan repayment pause has already effectively canceled $5,500 per borrower on average, and thereby pumped roughly $5 billion of excess stimulus into the economy each month with no corresponding increase in the supply of goods and services. The CRFB estimates that full debt cancellation could raise inflation from the already outrageously high levels by between 1/3 and 1/2 an additional percentage point. So in addition to being egregiously unfair and bad policy, Americans simply can't afford it. Thank you, Mr. Chairman.
Thank you, Senator Toomey. I'll introduce today's witnesses. Mike Pierce is the Executive Director, co-founder of the Student Borrower Protection Center. He served at CFPB as Deputy Assistant to the Bureau, advising the Bureau's work related to student lending and servicing. Mr. Pierce holds a bachelor's degree from George Washington University in Public Policy, a law degree from College of William and Mary. Welcome, Mr. Pierce. Dr. Neal McCluskey is the Director of the Center for Educational Freedom at the Cato Institute, co-editor of the book Unprofitable Schooling, Examining Causes of and Fixes for America's Broken Ivory Tower. He's on the editorial board of the Journal of School Choice. He holds a master's in political science from Rutgers, Newark, and a PhD in public policy from George Mason. Welcome, Dr. McCluskey. Dr. Jalil Mustaffa Bishop is an assistant professor at Villanova University, co-founder of the Equity Research Cooperative, and a native of Twinsburg, Ohio. His latest paper, Jim Crow Debt, How Black Borrowers Experience Student Loans, studied the impact of the student debt crisis on Black Americans. He received his bachelor's in history from Dartmouth and his master's and PhD in higher ed from UCLA. Dr. Bishop, welcome. And Mr. Pierce, if you'd begin your testimony, and please keep it close to 5 minutes. Thank you, all of you.
Thank you, Chairman Brown, Ranking Member Toomey, members of the committee. Thank you for the opportunity to testify today. My name is Mike Pierce, and I'm the Executive Director of the Student Borrower Protection Center and a former federal regulator for the student loan industry. The story of the student debt crisis is one marked by widespread economic distress, government inaction, corruption, and shocking abuses by some of the largest financial companies in the world. Today, even with the momentary pause in student loan payments, borrowers experience hardship as rising debt produces fewer homeowners and more credit card debt, jeopardizes secure retirements, and drives intergenerational debt. Worse, administrations of both parties have failed to confront the disparate effects this crisis has on people of color. widening the racial wealth gaps caused by centuries of systemic racism. The stark reality is that the student debt crisis is principally a failure of public policy and not merely a symptom of runaway college costs. A crisis made far worse by the student loan industry running roughshod over people with student debt. The ongoing payment pause has been a bulwark for borrowers against rising inflation, protecting millions from choosing between loan payments and necessities like food, clothing, or shelter. This expansive effort to help people with student debt represents a remarkable break with history. For more than half a century, lawmakers repeatedly used debt to expand access to college under the mistaken convention that student debt is, quote, good debt. This conventional wisdom has set up a generation of students to fail. Underlying all of this, the Department of Education has historically behaved more like Wells Fargo than a branch of the U.S. government. The Education Department's indifference to widespread law-breaking by student loan companies over the past 3 decades has driven a widening gap between borrowers' rights and borrowers' experiences. When millions of families lost their homes to foreclosure more than a decade ago, housing advocates warned of a similar gap between homeowners' rights and their experiences. This sad history is repeating itself. The law makes bold promises to borrowers, including that student loan payments will always be affordable and never be a lifelong burden. Yet before the pandemic, more than 1 million borrowers defaulted each year. Officials of both parties routinely call this broken, a mess, and corrupt. The administration has made meaningful efforts to remedy the failures plaguing the student loan system, but these changes are not enough. 2 weeks ago, a government audit found that for nearly a decade, officials knew that the student loan industry was not taking the necessary steps to deliver cancellation to the lowest income people and engaged in a shocking cover-up. Consider the 30-year struggle of one low-income borrower who started with less than $9,000 in debt. Her debt has now topped $100,000. Along her way, the loan servicer routinely misled her about her options that would have led to debt cancellation. Abuses like this have caused millions of borrowers to needlessly spend decades trapped in debt. Beyond the federal student loan market, private sector firms backed by Wall Street and Silicon Valley have constructed a minefield of risky, expensive, and predatory debt and credit. As I explained in my written testimony, over the past decade, the biggest banks and fintech companies have competed to fleece American students. I want to close by returning to the concept of student debt as a trap. Across the financial marketplace, laws prohibit lenders from offering loans that let borrowers pay less than the interest charged every month. Loans that allow debt burdens to actually grow over time. Regulators call this a, quote, debt trap. Yet this is routinely the case for people with student debt. And this debt trap snaps shut more often for people of color, particularly black borrowers. For every 1 black borrower who repays a federal student loan after 12 years, 6 more owe more debt than they originally borrowed. Fully 2/3 of black borrowers are caught in a debt trap today. This would be illegal if the lender was any actor other than the United States of America. President Biden did not break this system, but he has promised to fix it. It's up to him to wield the awesome power vested in the Secretary of Education and cancel student debt for every student loan borrower. According to critics, families and the broader economy will somehow be worse off when Joe Biden keeps his promise to cancel student debt, claiming that this is a giveaway to the college educated and ignoring the roughly 4 in 10 people who have debt and no degree. This may play well on Wall Street, but it rings hollow on Main Street, where poll after poll show a large majority want the president to cancel student debt, including most who did not go to college and most who have no debt at all. With the stroke of a pen, Joe Biden can improve the lives of tens of millions of people. Our economy is stronger when those who have faced financial precarity have the opportunity to build wealth. Canceling student debt is just, it is equitable, it is legal, and it is the only appropriate response to decades of government mismanagement and industry abuse. Thank you again for the opportunity to provide testimony, and I look forward to your questions.
Thank you, Mr. Pierce. Dr. McCluskey, you're welcome, recognized for around 5 minutes. Thank you.
Chairman Brown, Ranking Member Toomey, distinguished senators, thank you for inviting me to speak with you. My name is Neal McCluskey, and I'm the director of the Center for Educational Freedom at the Cato Institute, a nonprofit, nonpartisan public policy research organization. My comments are my own and do not represent any position of the Institute. Federal student loan programs are problematic, and it is important to address both their current impacts and fix them in the long term. Included in this is servicing, but problems there are just a symptom of a dysfunctional system. That said, loan problems do not justify drastic actions such as sweeping cancellation, which would create bigger problems, from helping the well-to-do to exacerbating tuition inflation and workforce distortions. Now, complaints about loan servicers are well documented, but they are hired by the Department of Education, and if they do their job poorly, it is incumbent on Ed to get the problems fixed. The department, however, has long failed to do so. This is not simply a failure of bureaucracy. The system created by Congress is often inscrutable to borrowers, servicers, and quite possibly Ed itself, featuring a dizzying array of loans and repayment plans that interact in confusing ways. Given this, it's no surprise that many complaints about servicers are actually about the programs. A 2019 analysis found that only 44% of complaints about servicers to the Consumer Financial Protection Bureau concerned things under servicers' control, while 35% were really about federal rules. Beyond the direct problem, federal student loans have major unintended consequences. First, they fuel skyrocketing college prices. One recent analysis found that for every dollar increase in subsidized loan maximums, prices rose 60 cents. Second, while they may have enabled greater college attendance, degrees have become increasingly hollow, with big increases in both the time students, or decreases in both the time students spend studying and literacy among degree holders. Third, goosed enrollment has likely fueled credential inflation, employers seeking degrees for jobs that did not previously require them. Relatedly, about a third of non-recent graduates who are four-year degree holders are in long-term jobs that don't require the credential. Finally, aid does not appear to have coincided with an increasing share of four-year degree holders who are low income. The share of all bachelor's degrees held by dependent members ages 18 to 24 of families in lowest income quartile has hovered around 10% since 1970 and dropped a bit from the beginning to the end. Now, the ideal solution to the student aid problem, is phasing out federal lending. But what to do about the current situation? First, do nothing extreme, including mass debt cancellation. Despite many problems, college is still typically a good investment, with the average four-year degree holder earning approximately $1.2 million more over their lifetime than someone with just a high school diploma. Graduate degree holders earn even more. Taxpayers, roughly two-thirds of whom don't have four-year degrees, should not fund cancellation for those who will see major financial payoffs. Repaying student debt is also not especially burdensome for most borrowers. Four-year degree graduates who borrow typically have monthly payments well within their ability to pay. Debt is also disproportionately incurred by wealthier people. Households in the highest income quartile hold 34% of all student debt, while the lowest quartile holds only 12%. Absent student lending reform, mass cancellation will also encourage more borrowing and price inflation, exacerbate credential inflation, de facto penalize Americans who economize on their education or after graduation economize to pay off loans, and would be illegal, or at the very least a gross violation of separation of power if done by executive order. Now, there are things that Congress can do to improve the situation that are short of mass cancellation. Income-driven repayment is intended to help struggling borrowers. The department must correct all borrower records, and Congress should simplify IDR going forward, perhaps consolidating it into one program which borrowers are automatically enrolled into unless they choose standard repayment. Congress should also eliminate probably the highly problematic parent and grad plus loans. Congress could make discharging federal student loans in bankruptcy easier, though important to remember is that taxpayers would bear the cost of that. Congress could also institute skin in the game, in which colleges pay a share of their defaults. Servicers are not the root lending problem. That is the federal system itself. However, it has not created so terrible a problem that it justifies mass cancellation. What it requires is fixing the existing programs to help struggling borrowers and to ultimately shrink federal lending. Thank you again for the opportunity to testify, and I look forward to your questions.
Thank you, Dr. McCluskey. Dr. Bishop, you're recognized for 5 minutes. Thank you.
I want to thank the chairman, ranking member, and the rest of the committee for inviting me here today. My name is Dr. Jalil Mustaffa Bishop. I grew up in Twinsburg, as the chairman shared, but Twinsburg Heights in particular, a nearly 100-year-old Black community that taught me most of what I know about justice work, and also what I needed to survive government-created debt traps as an unincorporated Black neighborhood in Twinsburg City. I bring those lessons here today as a professor of education and as an activist for Black freedom projects. My goal is to make clear that we are in a student debt crisis, a Black student debt crisis in particular, and that canceling all student debt, again, all student debt, is the best solution for a decades-long policy failure that is student loans. So let's just use some common sense. Student loans is basically the federal government looking at families and saying you do not have enough to pay for college. But here's a loan. Though we know you do not have enough to pay for college, let alone enough to make these loan payments. We then say, do not worry. You are going to make enough money to repay those loans in 10 years. We then had decades of evidence that borrowers were not able to make enough money, so we moved them to 20 to 25-year repayment plans. We have not developed a system to hold colleges, loan servicers, accreditation agencies, the Department of Ed, or a low-paying labor market accountable. We still have only punished one group, and sure, one group has consequences every time, and that is the borrower. The borrower who was failed way before they ever signed a loan in the first place. We are in a student debt crisis and arguably have been in one for the last 20 years. In that time, we have watched the total outstanding student loans increase by over 107% from less than $400 billion in the early 2000s, hitting $1 trillion in 2012, and now on the fast track to hit $2 trillion. The crisis should be understood primarily through two issues: default and endless years of payment. First, we have a growing number of defaults for struggling borrowers. Before the pandemic, we had 10 million borrowers in default. Default means the debt collection fees on top of your student loan balance, but also that borrowers can be sued or have their incomes or tax returns garnished. And this brings us to the second part of the crisis: endless years of payment. People are making payments only to see their balance increase due to interest. When we look back at loans issued each year since 2009, the majority of those balances are increasing instead of being paid down. Under the Trump administration, the Department of Education released a report that estimated that $500 billion worth of student loans will not be repaid. And again, this was pre-pandemic. During the pandemic, the government has not received payments for the last 2 years due to the pause, and both the borrowers and the government have been fined. Evidence simply is showing that increasingly student loans will not be repaid. People simply do not have the money to repay because they have not found the high-paying jobs that allows them to earn incomes both to afford a high-quality life and to repay their student debt. People are on a payment path to nowhere. It did not have to be this way. We once had a grant-driven higher ed system in the late 70s and early 1980s. Now when it comes to low-income students, the Pell Grant covers less than 33% of college costs when it used to cover the majority. Every year, we burden students and their parents with $80 to $100 billion of student loans. This is unnecessary. For example, if we just increased the Pell Grant by $6,000 a year, it would eliminate Parent Plus loans for 75% of all low-income parents and 85% of all low-income Black parents. $6,000. But instead, we give it out as a loan, throw families into financial crisis, and the only one who wins are the debt collectors, loan servicers, and law firms who go after borrowers for repayment. For the rich, we are willing to spend in the trillions. For working class people aiming to earn an education, we give them a lifetime debt sentence. In addition, the student debt crisis must be understood as a racial justice issue. It is eradicating any chance at wealth for communities of color, especially Black communities. When we look at Black households with student debt, 52% have zero or negative wealth. When we look at Black households with no student debt, the percentage drops to 25%. Black people are not just without wealth, we are being pushed deeper into the negative wealth hole. In this way, student loans are not just a racial justice issue, they are a racist tool. I co-authored a report with Dr. Jonathan Davis and the Education Trust called Jim Crow Debt. We heard from nearly 1,300 Black borrowers about how student loans are a debt trap. Debt traps that we have seen in history like sharecropping, contract mortgages, most recently subprime mortgages and payday loans that limits Black people's ability to build generational freedom. Student loans do not belong in a conversation about opportunity. They only belong in a conversation about how, once again, this country created a debt trap that is so vicious that it captures and holds Black students, their parents, and wider communities of color in debthood for a lifetime. So I opened up with common sense, and I want to close with common sense about why student debt cancellation will not help the rich. Unless all of a sudden a rich person in this country is someone who's on a payment plan, has zero in assets, has more debt than income, is a person of color, and lives in a census tract that is working class, because this describes the face of a student loan borrower. So let's make it clear. $10,000 is not enough. Even $50,000 is not enough for economic and racial justice. Black people, my family, my community are more likely to owe over $50,000 just for undergrad, have parents who borrow into the six figures, rely on private student loans, and if we ever make six-figure income, we often have six-figure loan debt. So you cannot limit student debt cancellation and also claim to care about racial justice. The data is now on your side, people's life stories are now on your side, and history will not be on your side. We need full debt cancellation, and we need it yesterday. Thank you to the committee, and I look forward to your questions.
Thank you, Dr. Bishop. I want to start with the last 2 minutes or so of your testimony when you stated that 52% of black households with student debt have zero or negative wealth, and that number is 25% with those without student debt. What happens? I mean, you're since arguing it's worse for black Americans to take out debt to go to college in order to build wealth than to not do it. What happens in the next 5 years if we or the president don't do something about this?
So as we know, there's a student debt crisis for borrowers overall, but when we look at what's happening with black students, we are seeing a growing kind of median debt balance that is sometimes tripling when compared to their white counterparts. So if we don't cancel student debt, if we don't move towards a path of providing higher education as a public good, you're going to continue to see black borrowers, black families, black communities have the highest student loan balances, have the highest concentration of student loan delinquencies, and not just struggle to build wealth, but struggle to get out of the hole that's getting deeper and deeper around negative wealth.
Thank you. Good explanation. This committee, when I took the chairmanship 15 months ago, this committee was just called the Senate Banking Committee to most people, colloquially and almost officially. Its full name is Banking, Housing, and Urban Affairs. And we focused really on housing and all that comes with that, perhaps more than anything else. And housing is just universally understood as the best way to build intergenerational wealth. And the race gap there, black homeownership hasn't much changed since Dr. King's assassination, which sort of preempted Congress finally to pass fair housing. So can you explore for a moment student debt exacerbating the racial wealth gap? And I would think a major component of that is if you face major student debt, you don't have a down payment for a home, you're not able to get a loan, or you simply can't afford a home.
So what we have to understand is that the racial wealth gap was built through systemic racism, that student loans did not create the racial wealth gap, but it is absolutely increasing and intensifying that gap. When we look at home ownership rates for black college grads, they have a lower home ownership rate than white college dropouts. And this is important for us to understand because the best way to guarantee that you build wealth is being able to start with wealth. And most wealth in this country comes through inheritance. It comes through being able to build equity in your home. And that's something that hasn't been available to black people fairly, inclusively, or equitably. So it's something that we have to understand that student debt is digging that hole deeper, but it's also not a silver bullet canceling student debt, but it allows that hole to stop going deeper for black families and communities. Thank
you, Dr. Bishop. Could you submit to the committee later the data on your statement, which was an extraordinary statement that home ownership is higher among white dropouts than black graduates?
Absolutely.
If you would do that, that could be very, very useful to us. Mr. Pierce, student loan servicer mismanagement contributed to borrowers explain how student loan servicer mismanagement contributed to borrowers having larger debt for longer periods of time. It's quite a phenomenon that people think they're paying in living up to their end of the bargain on two of the big programs, and they find out at the end of 10 years that some mistake was made and they've lost any ability to get forgiveness. So talk about that and talk about what CFPB can do to ensure student loan services are properly servicing these loans and that borrowers are protected.
Absolutely. So taking a step back and thinking about how we got here, the government has depended on these private sector companies called student loan servicers to give people advice about how to repay their student loans going back decades. Sometimes these are private sector companies that own federally backed loans. Sometimes they're contractors for the government. But in both cases, law enforcement officials of both parties going back multiple administrations have alleged that these companies routinely provide bad advice to people. And in particular, there's one scheme called Forbearance Steering, where a company tries to rush a borrower off the phone because it costs more money to provide them counseling. And in doing so, puts them in a repayment option that adds more cost to the debt and knocks them off track from loan forgiveness. And I do want to cite in particular one company, Navient. Navient was alleged by the Consumer Financial Protection Bureau to have added $4 billion in unnecessary interest charges on the backs of more than 1.5 million of its customers over the course of the better part of a decade. That litigation by the Consumer Financial Protection Bureau is still ongoing. But earlier this year, Navient did enter into a settlement with a bipartisan coalition of attorneys general led by attorneys general from both of your states, the Republican Attorney General of Ohio and the Democratic Attorney General of Pennsylvania. And in that settlement, these bipartisan attorneys general allege that Navient engaged not only in this forbearance steering scheme, but knocked borrowers off track as they tried to maintain affordable loan payments under income-driven repayment over the long term.
Senator Toomey.
Thank you, Mr. Chairman. Dr. McCluskey, let's consider for a minute the case of two similarly situated families with children who are in college. Let's say that they're about the same size, they've got about the same income, they have very limited assets in both cases. But one of the families spent 18 years of their children's lives scrimping and saving to pay for their kids' college education. The other family lived more comfortably. Maybe they took some more vacations, maybe they bought newer cars. The first family then writes a check, series of checks, to pay the tuition for their kids' college. And the second family has no college savings, so they take out a student loan. Can you tell me what you think about the fairness of saying to the family that worked hard and sacrificed, it's nice that you did that, but now your taxes are going to go to pay for the tuition of the family that chose to live more comfortably instead of saving for college. How is that fair?
Yeah, it's highly problematic to say to people who did their best to minimize the cost of higher education for themselves that you will now pay for people who didn't. And this is a problem in that people who take out student loans are not all necessarily low income or even middle income. We see that higher income families have taken out loans often to go to college. And the real danger, I think, to any sort of sweeping cancellation is, what does that say then in the future? The future then is, well, we should just expect that if we take out debt, it'll be forgiven, because how could you forgive debt in the past and not do it again? So we're making it even worse in incentivizing people to say, no, we really shouldn't economize as best we can because we'll expect these loans to be forgiven.
Doesn't the logic of the argument that we should wipe out this debt, doesn't it kind of require that it becomes a permanent thing? And I think Dr. Bishop even alluded to the idea that these should be grant programs. And if we said, well, anybody who happened to graduate prior to, 2022 gets all their debt forgiven, how do you not forgive the debt of someone who graduates in 2024 or 2025? So it is sort of embedded in the logic and inevitability that this is meant to be a permanent feature.
You would sort of logically have to conclude that. I haven't actually seen something that said or a lot of discussion about eliminating student loan programs. I've just seen primarily a discussion of cancellation. And if you do cancellation without reform, at the very least, of existing programs, you're absolutely creating incentives for much more borrowing in the future with the assumption that it'll be forgiven.
Totally. That would be the expectation. From 1998 through 2018, which I think is the most recent year for which we have data, inflation in general, now we have data more recent than that for inflation, but you see the point I'm getting to. Inflation increased by 56% in general during that period of time. College tuition increased by 183%, 3 times the general elevation of the price level of the economy. So how strong is the evidence that this massive excess inflation is related to increases in government contributions, and what would the effect on college tuition be if we did a broad cancellation?
Yeah, so there's very strong evidence that the student aid programs have enabled price inflation in college. We both actually cited the Fed report. That is just one among many studies that have found an inflationary effect of aid. If you look at sort of the historical sweep of prices, where you see a big increase, a big kink in how much we increase prices, was in the late 1970s, early 1980s, when student loans were greatly expanded to who could access them. So the evidence is very clear, I think, that aid fuels price inflation. It enables it. And if we say that we're going to cancel debt now, you have sort of automatically put in even more powerful incentives to borrow as much as you can and for colleges to raise prices as much as they can, because really a third party, taxpayers, will be the ones who pay for it.
So just my last point. So the logical conclusion of this, as we've discussed, is just make it all free. Just give the money away. Just make it grants. Just make college free. In my state, there are quite a number of skilled blue-collar jobs that pay more than the average college graduate earns upon graduation. There's welders and plumbers and people with all kinds of skills that are very valuable. But if you said, well, we'll just make the taxpayers pay for all of college, what kind of distortions would we get as a result of that policy?
Well, you'd see a lot more people who would be going to college and would see what we've seen now for several years, which is employers are increasingly requiring degrees for jobs that didn't previously require them, where there's not evidence that the skills needed to actually do that job have changed. So we create a credential inflation problem. For those jobs where it's much more valuable to have on-the-job training, will now incentivize employers say, and also have a degree, because there are more degrees out there. It's this very basic screening we could do to say, well, you may be able to give us an idea we could finish something you started if you have a degree. And it's just easier to ask for those things. But that credential inflation is incredibly inefficient, and it hurts people in the workforce saying, now go to 4 years of school that you could be working and learning valuable skills.
Thank you very much. Thanks, Mr. Chair.
Thanks, Senator Toomey. Senator Menendez from New Jersey is recognized.
Thank you, Mr. Chairman. For years, I have watched and listened as my constituents and their families have suffered irreparable financial harm at the hands of their student loan services. Year after year, millions of borrowers are mistreated by the student loan servicers who routinely provide inaccurate information, fail to disclose and explain fees that are charged to borrowers, and ultimately make it harder for borrowers to pay off their loans. This is especially true for our nation's public servants who have often served as frontline workers during the COVID-19 pandemic. Cumulatively, these missteps cost borrowers millions of dollars in interest and additional payments. And in some cases, borrowers have no choice but to remain in the workforce beyond their preferred retirement timeline just to pay off the loans. What's upsetting to me is that this current mess was preventable. The Department of Education has known about these systemic issues for years. Its own Inspector General found in 2019 that despite regularly identifying instances of servicers' noncompliance with the terms and conditions of the loans, the Education Department did not track or analyze these failures, nor did they hold servicers accountable for their poor performance, especially servicers of loan in the Public Service Loan Forgiveness Program. That failure to act means added financial pain for the borrowers we're talking about here today. Beginning in at least 2009, when the first federal student loan servicer affiliated computer services, better known as ACS, began servicing student loans, there is a documented history of the company's endless errors, especially related to its handling of PSLF qualified loans. So, Mr. Pierce, your organization released a report in 2020 detailing ACS's repeated failures. How specifically did ACS mishandle borrowers' accounts, and what kind of impact did that have on borrowers, especially on the PSLF borrowers?
Thank you, Senator Menendez, and thank you for all of your leadership on these important issues over the course of more than a decade. ACS was a very important market participant going back to the earliest days of the student loan program as the sole student loan servicer for the federal government in public service loan forgiveness's first years, but also as a major market participant servicing federal student loans that were then owned by big banks like Wells Fargo and JP Morgan. This company committed more than 5 million individual errors on borrowers' accounts over its time as a government contractor, and was the target of enforcement actions for its private sector servicing by attorneys general in New York and in Massachusetts and the Consumer Financial Protection Bureau. All told, ACS is responsible for many of the underlying problems that resulted in 98 out of every 100 public service workers applying for PSLF ultimately being rejected.
98 out of 100. Now, will the limited PSLF waiver that expires in October, as well as Ed's most recent forbearance waiver announced last month, rectify all of ACS's egregious missteps, especially those related to the PSLF borrowers?
It's a start. More than 100,000 public service workers have had their debts canceled since October. That's about 7 times more debt relief than the prior 14 years of the program. But it's not enough. There are certainly public service workers who are going to miss out on this limited opportunity because they don't know about it or because they've been provided bad information even now by their student loan company about what their rights or options are.
Well, the Pennsylvania Higher Education Assistance Agency, known as FIA, or by its other names of Fed Loan or American Education Services, replaced ACS as the largest servicer of PSLF loans in 2014. So, Mr. Pierce, Massachusetts and New York recently reached settlements with FIA about its student loans servicing, especially its PSLF servicing. How did FIA, acting as Fed Loan, mishandle borrower accounts?
A whole range of different abuses by this company, which, to be clear, is a private sector company but was created by the Commonwealth of Pennsylvania and has existed with the implicit backing of Pennsylvania taxpayers, despite this record of abusing its customers. It routinely mishandled borrowers' paperwork, provided bad information, steered borrowers into forbearance, the same scheme that Navient was accused of by a different group of attorneys general, and taken together, these abuses resulted in the collapse of the public service loan forgiveness program before Joe Biden stepped in to make things right.
So will the limited PSLF waiver in the most recent forbearance announcement rectify all of FIA's missteps?
Once again, it's not enough. Joe Biden needs to cancel student debt for everybody because these piecemeal actions are important and necessary in their own right, but they won't reach every borrower that's been wronged by this legacy of mismanagement and abuse.
Okay. Thank you so much for your responses.
Thank you, Senator.
Thanks, Senator Menendez. Senator Smith from Minnesota is recognized from her office.
Good morning. Sorry, Chair Brown, I wasn't expecting to be on so quickly, but I'm glad to be with you. Let me just start out, if I could, with Mr. Bishop. And I'd like to actually follow up on the line of questions that Ranking Member Toomey was asking. So Ranking Member Toomey was essentially, if I understand it, suggesting that that loan forgiveness essentially creates a moral hazard, that it actually encourages irresponsible behavior. That's not his word, but it encourages people who haven't saved, who haven't maybe done all the right things, to continue in that behavior to the detriment of families that have scrimped and saved, as Senator Toomey said. I'm wondering, Dr. Bishop, if you could just respond to that and help us understand how that fits with what you see as the underlying challenges with student loan debt.
Thank you. So in my research and my time working with, student loan borrowers, I really have not seen any evidence of borrowers being reckless or that those who are borrowing student loans are just because they failed to save. As was noted, college costs have increased rapidly, and we should not conflate the need to hold colleges accountable to get costs under control as the same as students or borrowers somehow having a failure in personal responsibility. One thing I like to remind people is that in this country, we subsidize or give a tax break to families who put money into college savings accounts. But usually those are families who have the additional income to be able to put money up each year into those college savings accounts. We spend $55 billion a year subsidizing those accounts. That's more money than we spend on Pell Grants for low-income students. So it's important to think about what is in our policy structure that incentivizes those who already have additional income and additional wealth to be able to afford college, and then what's in our policy infrastructure that disadvantages those who do not have that extra money, because you can't save if you don't have the additional income or the ability to put that money into savings. So this is not a matter of personal responsibility. It's a matter of college costs that have grown rapidly, as was noted, but also not having a free college option to make clear that allows families to access higher ed without going into a debt sentence for not just a decade, but now we have many borrowers who've been carrying this debt for nearly 20 years.
Thank you. Thank you. You also, I appreciate that. You also talked about how the declining value of Pell Grants and how I hear about this from Minnesota all the time, as we have one of the highest student debt concentrations in Minnesota of really almost any place in the country. And there's been this dramatic shift in the buying power of the Pell Grant to student loans, shifting from grants to loans. I guess you could call that free college, but I mean, I think that that is sort of a benefit, as you said, of higher education being a public good. Could you just describe kind of what you think has, from your research, what's sort of driven that shift, and what would be the impact of changing policy so that we put more emphasis on grants versus loans for, especially for Black and brown people, people who are already living with the challenges, the systemic challenges with racism that we have in our communities?
Thank you. So what's important to make clear is that, again, we had a grant-driven system in higher education. And then the moment when Black and brown and low-income students started to enroll in higher numbers is where we saw this major shift to student loans as a way we're financing college opportunity. And that's important to understand, is that, again, there was a different type of financing system that we had just in the 1970s and 1980s. So what this means is that now Black and Latino students, who are the majority of these students are Pell eligible, do not have access to a Pell Grant that actually covers the cost of college attendance. And the consequence of that is that these communities of color have to rely on student loans at high rates, that nearly 90% of Black students are relying on student debt. And this is an issue not only when we're thinking about higher education as a public good, but it's an issue when you think about the impact of that student debt as borrowers have to carry it throughout their lifetime and are limited as they're trying to do other life planning around labor market, family planning, saving for retirement, having something as simple as a savings account for a health emergency or a car repair. So it's not just what happens to students in those early years when they're trying to decide how to pay for higher ed, but what follows them as they go through their lifetime as adults and increasingly as older adults.
Well, and I think this is why we call this a debt trap. I've talked to people in Minnesota who said it feels like a big bait and switch. You know, I'm told that what I need to do in order to better, my economic opportunity to lift myself and my family up is to get a higher education, and then it ends up not being actually a weight that loads me down as I'm trying to figure out how to buy a house, how to buy a car, how to maybe take a job that that much more fits my interests and my long-term goals, but I can't do that. And I think it also, we have to remember that these are college students often who are working 2, sometimes 3 jobs while they are trying to be in college, do the very best that they can, and also catch up on those student loans. And we have also not talked a lot today about how many people take on these student loan debts and then they never finish because they can't afford to finish something. And so then they have the debt without the benefit of the degree. Thank you, Mr. Chair.
Thank you, Senator Smith. Senator Warren from Massachusetts is recognized in person.
Thank you, Mr. Chairman. Right now, President Biden is considering canceling debt for the 43 million Americans who have student loans. Now, this policy is incredibly popular with the American public, no matter who you ask, and that includes people with student loans and people without student loans. Big majorities support cancellation. And I think the reason for that is that there is scarcely a working person in America who does not have a friend, a family member, a coworker who is weighed down by student loan debt. But if you're listening to the talking heads with fancy degrees who oppose this policy, you might be under the impression that the borrowers who the president wants to help are all wealthy. They're all wealthy Harvard grads who don't need any help with their loans. So what I'd like to do is just look deeper into the data. Dr. Bishop, you're an expert on student borrowers and their experience in the student loan system. What does the data say about who borrows money to attend college? Are they generally very wealthy?
I think the data is quite clear that those who borrow student loans are not wealthy, that they are not people who have high levels of assets, that more than half of borrowers with student loans, or more than half of student debt is held by families with zero or negative household health. And especially when we're looking at communities of color, where again, we see almost 90% of Black students borrowing student loans compared to 68% of white students. So the idea that student loans are carried by wealthy families, I think is something that doesn't show up in the data, and also is something that, again, goes against what we understand as rich people or wealth in this country.
Okay, so these are people who are borrowing are people with, at best, very modest means. Let's take a look then about the kinds of schools they attend. Do most borrowers take out loans so they can attend elite schools or business schools, Dr. Bishop?
No, and as someone who's a low-income student who went to one of these elite schools, we know that the vast majority of borrowers are not coming from the Ivy League, that when we look at those selective schools, we see around 0.3% of all borrowers come from the Ivy Leagues.
Wait a minute, Dr. Bishop, can you say that one the other way? What proportion of student loan borrowers are not coming from the Ivy Leagues?
So 99% come from institutions that are not the Ivy League.
99.7, according to your data,
Yes.
right? Okay. So they're not coming from the Ivy League. So let's do one more. Critics argue that canceling student loans would mean helping out people who are earning good money with their college degrees and will be able to pay off their loans without the government stepping in. Dr. Bishop, are those valid criticisms? Are student loan borrowers all earning college graduate wages and in a good position to pay off their loans?
No, so we know that 40% of student loan borrowers have student debt but do not have a college degree. We know that increasingly many student loan borrowers are parents who do not have this so-called lifetime earning trajectory ahead of them, that when we look at Black students, we know that they owe more than they originally borrowed a decade out, and that 20 years out, they've only paid down, on average, 95%, or they still owe 95% of their original student loan balance.
So, Dr. Bishop, can I ask you just unpack that just a little bit? So students go into college, right? And they borrow while they're in school. And you said, what proportion of them never graduate from college?
40% of student loan
40%. So 4 out of every 10 of the students who's carrying student loan debt, do they make college grad wages?
Absolutely not.
No. So here they are. They're earning like high school grads, but all they're getting, but they're managing college loan debt. And then you also said people don't think of it this way. You borrow money, but for what proportion of Black students did you say 12 years out from when they started borrowing money are actually deeper in debt?
So we know 66% of Black student loan borrowers over a decade out are deeper in debt, owe more than they originally borrowed.
And why do they owe more than they originally borrowed?
Because we understand that Black students not only borrow more, but they access higher ed institutions that are more likely to be for-profits and predatory, to be institutions that are already under-resourced themselves, and that they're navigating a higher ed system that is very different than their white counterparts as far as opportunities and accessibility.
Yeah. And I assume also we're talking about what kind of wages they earn when they come.
Absolutely. So entering the labor market, which often doesn't get as much attention in these conversations, we still have persistent employment gaps, racial income gaps, that even as Black people earn more degrees, we still see our wages not reflecting that.
I appreciate this. It's clear that the opponents of student loan cancellation are living in a bubble of privilege that is completely disconnected from the reality of the people who borrow money to get an education. As you said, 99.7% of borrowers did not get an Ivy League degree. Heck, 40% of them didn't get any degree at all. The majority of these loans are held by people with zero wealth. And Black borrowers are not just treading water trying to keep up with their payments, they're actually falling behind. Meaningful student loan debt cancellation is the single most powerful thing the President of the United States could do on his own to help narrow the racial wealth gap among borrowers, to help families that are struggling with rising costs, and to expand opportunities for millions of people. We need to stop listening to out-of-touch pundits and politicians whose biggest worry is that we might be helping working people too much. Thank you, Dr. Bishop. Thank you, Mr. Chairman.
Senator Warner from Virginia is recognized from his office.
Thank you, Mr. Chairman. I appreciate also the opportunity to go in front of my friend John Tester. I'll just ask one question that I wanted to highlight, and that's for Mr. Pierce. If we go back, and it's an issue I've been working on for some time, to 1982, I think Congress created in the student loan program the ability for a couple to consolidate their loans together and at a slightly lower rate pay on it in a single payment. The pitch made, I think, probably some good macro sense, but at that point, the Congress never allowed, even if the couple were to then separate or to get divorced, any ability to separate this consolidated loan, and consequently, one party or the other, oftentimes the female spouse, got stuck with that burden. Do you know, Mr. Pierce, any other student loan product where that does not allow borrowers to separately, if they took on their debt separately, to somehow not separate again if they have some kind of an event like a divorce to take place?
No, I do not.
Well, I appreciate that. Now, matter of fact, this was so egregious that Congress stopped issuing this type of loan consolidation with this restriction on being able to separate the payments downstream if the couple comes apart in 2006. This came to my attention from a woman named Sarah, who was a single mom and teacher in McLean. She and her ex-husband separated. The ex-husband, frankly, didn't pay his share of the bills. And Sarah, single mom, as a teacher, got stuck paying that joint consolidation effort literally for months. She ended up having even some of her wages garnished. Mr. Pierce, the Education Department has told me there are approximately, remember, these were all loans pre-2006, 14,000 plus outstanding joint consolidation loans held by the department with a total outstanding balance of about $800 million. Can you talk a little bit about this issue? I know you're familiar with it. What kind of burden it puts on these individuals, oftentimes who may have been in a abusive relationship, oftentimes their former partner being willing to basically, screw it, I'm going to leave all this obligation on you. I've got a bill with Senator Rubio and Senator Smith and Senator Cornyn that would allow this kind of breakup to take place. Could you weigh in on that and give me your views?
Absolutely. So you mentioned a number of the problems with these loans, particularly in cases of domestic violence or marriages where one spouse is taking advantage of the other, and it causes financial ruptures in families where one spouse may end up assuming responsibility for the debt owed jointly. Your bill would help dissolve these loans, but not just to help provide a fair outcome for borrowers, but to actually restore access to key parts of the student loan safety net that are denied to borrowers that have these so-called spousal consolidation loans, including access to public service loan forgiveness and the ability to get an income-driven repayment that actually matches their financial circumstances. Right now, the student loan safety net is failing people with these so-called spousal consolidation loans, and your legislation would fix this mess.
Well, I appreciate that, Mr. Pierce. And I would point out, Mr. Chairman, Ranking Member, this is something that we've got virtual unanimity. There's one senator who still has a hold. We're trying to work through this. But this is a bipartisan, not going to solve all the problems, but for 14,000 Americans who are caught up in these joint consolidation loans, many of them having circumstances, again, as Mr. Pierce just said, with spousal abuse, we could provide some much needed relief. My hope is that we can get that one senator's hold removed, and I will, yield back the balance of my time, and really do hope you go to Senator Ossoff next so we can keep Senator Tester in that box waiting for, hours and hours to come. Thank you, Mr. Chairman.
Thank you, Senator Warner. Senator Van Hollen of Maryland is recognized in person.
Thank you, Mr. Chairman, Ranking Member Toomey. Thank all of the witnesses here today. I want to start by talking about some of my constituents who have also been victims of this very broken process. Mr. Pierce, thank you for your testimony, all of you. We're grateful for your contributions here. As you point out, a sort of bipartisan failure in policy has been made worse by widespread lawlessness across the student loan industry. I have a constituent, her name is Ms. Regina Showalter. She's a 12-year federal government employee at the Department of Defense. She reached out to us because payments that she had made to her loan servicer had not been counted toward the public service loan forgiveness eligibility. And that happened when her loan was transferred from one servicer to another servicer. Fortunately, because the Biden administration put in place this temporary waiver, we had a little breathing room, and we've been able to resolve that particular case. But as you know, there are millions of others who are not getting the relief they need, including another constituent, Deborah Harburger, who shared her testimony before this committee just earlier this week. She's a social worker. Her employment is covered by the Public Service Loan Forgiven Program, the type of employment she's engaged in. But her application for forgiveness was denied in 2017 after 10 years of regular payments, 120 payments, because her student loan servicer never informed her that her FFEL loan was not eligible for under the requirements of the PSLF. So we're working with her right now. My question to you is, the Biden administration is reviewing this process. We are in the process of bringing on new student loan servicers. What is your level of confidence that we're going to be able to address the issues where we've seen failings in the past? And are the new contracts putting in place affirmative obligations on the loan servicers to make sure that their borrowers are fully informed of where they stand?
Thank you for the question, Senator. And I want to start by saying the Biden administration has taken major steps to hold these student loan companies accountable, including appointing my former boss, former CFPB Director Cordray, to lead the government's Office of Federal Student Aid, which is a big step forward. It's the first time that an administration has ever made a meaningful effort to try to hold these companies accountable and to try to do better by people with student debt. But it's not enough. And we are in a place where companies like Navient and Fed Loan Servicing that were responsible for messing this up in the first place have parted ways with the government, and that's a good thing on its own terms. But the companies that are coming in behind them, firms like Maximus, which operates as AidVantage, are also showing evidence of the same sorts of sloppy servicing and potentially illegal practices that left us in this place.
Well, thank you. That's why, as you say, we have both the good news and the bad news. The good news is progress under the Biden administration. The bad news is we got a long way to go. I agree with Senator Warren that there is an important place here for loan forgiveness, at least up to certain amounts. And I think as the last round of questioning with you, Dr. Bishop, indicated, we can address the issues which are primarily, in my view, very much exaggerated about providing sort of windfalls to wealthy families, as you already indicated. One of the roots of the challenges here is the Pell Grant, which, when it was first devised back in the 1970s, covered about 80% of the costs of a four-year college education, whereas today that's under 30%. Which means that students who can't afford to go to college, have to borrow at least enough to make up the difference. Dr. Bishop, you've talked about in your testimony a Pew Trust report that shows that from 2019, a national sample of federal loan borrowers, the report was 2019, showed that borrowers from 2003 to 2004 found after 12 years of initial borrowing, over half of them experienced negative amortization. Can you just, in the remaining time, talk about the fact that folks are totally underwater and what are the only available remedies at this point?
So what's important to understand is that, not only are Black borrowers underwater when we look at their repayment progress, we also are seeing increasingly, really since 2009, that loans for each year, if we look back at their origination, that those balances are increasing or not being paid down, the majority of those loans. So when we think about kind of the student debt crisis, yes, we're seeing it intensify for Black borrowers. We're seeing it intensify for borrowers who are in default. But when we look at borrowers overall, even when they're on income-based repayment plans, those balances are not being paid down. They're being extended out to 20 to 25 years. And really, there's no evidence or no real sign that the government is going to be able to have this money repaid, that borrowers are going to be able to make these payments. And the question that we have to ask ourselves, if we're saying in 20 to 25 years, we're going to potentially cancel this debt, and we have all this evidence now that these loans aren't going to be repaid, why make people go through 20 to 25 years of harmful payments? Why continue to pay hundreds of millions of dollars to loan servicers and debt collection agencies and private law firms to go after borrowers who simply don't have the money when we could use debt cancellation now to provide harm reduction right now in real time?
Thank you, Mr. Chairman.
Thank you, Senator Van Hollen. Senator Tester is recognized from his office. Senator Tester of Montana.
I want to thank you, Mr. Chairman. I appreciate the recognition, and I want to thank you for including a constituent of mine in your roundtable on Tuesday, Megan Bailey, who is a veteran and social worker serving her fellow Montanans, but is struggling with the process for accessing the public service loan forgiveness that she's earned. And so far, that has occurred way too often. Before I get to my questions, I just want to say one thing. There's been a lot of great points that have been made during this hearing, but there's one thing that is a fact, and that is this generation of folks who are going to college are getting layered with too much debt. College costs too much. I go back to my family. I've got two older brothers. When they went to college in the late 60s, my oldest brother drove truck for the summer and paid for his college with that 3 months of work. That is simply impossible today. And my folks were able to pay for my college when I went to college. On that same farm that my wife and I operate, when my kids went to college, we could not afford to pay for the tuition for my kids. They had to take out loans. And why is that? I can tell you why that is. That's because the public support, the public dollars, the tax dollars that go into these institutions has dried up, and the student has seen increased tuition because of that, and has made college unaffordable. So what's the big deal? Who cares? The fact is, if we're going to maintain ourselves as the leading democracy in this world, public education is critically important. K-12 public education is. So those folks that want to privatize public education, I don't know what your end game is, but it's not going to be good for the country. And if you want an economy that moves forward, higher education is the key. If we want to be the biggest, greatest country in the world, higher education and getting the next generation of leaders educated is very important, and you cannot saddle them with tens of thousands of dollars in debt, or they will choose not to go to school, and that's a bad thing. I graduated with a degree in music. I use that degree seldom, but what that degree tells potential employers is that I can apply myself and I can accomplish a job. So that degree is very, very important, even if it's not used in your major subject area. We've got a lot of work to do here, a lot of work. And I don't believe that students should have no skin in the game. They should have some in the game, because I think skin in the game counts. But this is too much skin, and it just isn't working. So my question is for you, Mr. Pierce. We've seen significant improvements in recent months in folks being able to finally use the public student loan forgiveness program. It's a program that I'm a strong supporter of, but it's also a program that I've been very frustrated with. It's improved, but it still isn't perfect. So, Mr. Pierce, what else needs to be done to keep improving this program so that the folks who have kept up their end of the deal, working and serving their communities, get that benefit that they have earned?
Thank you, Senator Tester. The short answer is the Biden administration needs to use all of the tools that it already has to write stronger rules to be able to provide this promise to borrowers that if they work in public service, whether that's as a teacher or a healthcare worker or as a firefighter, that they're able to actually get their debts canceled after a decade of service. For the better part of 15 years, the rules for this program have been full of tricks and traps and have knocked a generation of public service workers off track. The Biden administration has taken great steps to try to open the door to debt relief for those public service workers, but it's not enough and it's not permanent. As you rightly explained, at the end of October, this limited waiver for public service workers is set to expire. And the Biden administration needs to extend that waiver right now, provide public service workers with certainty, and then also rewrite the rules of this program so that it works moving forward.
So, Mr. Pierce, your Student Borrower Protection Center has published research on the challenges that rural borrowers face in repaying student loans compared to those folks that move to metropolitan areas, including the impact that it has on young farmers. What has SBPC seen as causes for that difference, and are there things that we as policymakers can do to address that gap?
I want to cite some research done by the Federal Reserve Board of Governors, actually, that found that student debt is driving rural so-called brain drain. That people that grew up in rural communities may even go to school in rural communities, but they're not staying there. They're moving to cities that have more vibrant labor markets, and that's causing rural communities to struggle. We hosted an event with the Young Farmers Association a bit more than a year ago, and we heard from farmers working in rural communities about how much advanced knowledge it takes to run a modern farm in 2022, and that requires a higher education, but the crushing weight of student debt prevents people from staying on the farm and makes them leave their communities, and it's producing less vibrant, less resilient, less robust rural communities.
Well, I want to thank you. I want to thank all the folks who testified. I want to thank you, the chairman and ranking member. Look, this is a huge problem, and it doesn't go away unless we're proactive and looking for ways to solve the student debt problem. And I think by working together, we can do some good stuff. Thank you, Mr. Chairman.
Thanks, Senator Tester. Senator Warnock from Georgia is recognized if you're ready.
Thank you so very much, Chairman Brown.
I really do.
It's good to be here, and I'm so glad that we're having this hearing on examining student loan services and their impact on workers. It's clear to me that the number one thing that the President of the United States can do right now is to lower costs for Georgians and to help close the racial wealth gap is to cancel student debt. Here's an opportunity to do something truly transformational. And that's why I've been pushing President Biden to cancel up to $50,000 in federal student debt, which research shows will boost our economy, create jobs, spur small business creation and home ownership, and free an entire generation from the crushing economic burden of student debt. I say this as someone who was the first in my family to graduate from college, and I wouldn't be here without low interest loans at a time when you could actually pay them off, and Pell Grants. Dr. Bishop, I'm concerned that too many folks in Washington don't understand who actually has student debt and who does not. What are some misconceptions about who has student debt, and what does the research say about who actually carries this debt burden?
So we have seen a lot of narratives and research and framing that those who carry student debt are the wealthy because they have, so-called high incomes. And I think first we have to be clear that there is a difference between wealth and income. When we look at the assets that student loan borrowers have, we see that student debt is overwhelmingly concentrated amongst borrowers who have zero or negative wealth. So again, this is not the common sense way that we would describe someone who's wealthy. When we think about who's actually struggling, sometimes we hear this number of only cancel 10,000 because that's the number of people who are really struggling. And we know, particularly for Black borrowers, that if we cancel 10,000 today, that will still leave 83% of Black borrowers who not only still have student debt, but they have student debt where they owe more than they originally borrowed. So a part of this is understanding that when we're talking about debt canceling,
I hate to interrupt you, but I want to be clear. If you cancel $10,000,
83% of Black borrowers would not only still owe student debt, but they will owe more than they originally borrowed. Because Black borrowers, we know, are more likely to borrow $50,000 to $100,000 in student debt. So $10,000 absolutely will provide some relief, but really will not do what's possible to really close those gaps for Black borrowers.
Thank you, and that makes sense because if you have a student loan, by definition, your family does not have wealth in the first place. I know that when I entered college, my family's income was equal to the tuition, room, and board at Morehouse. That's why the majority of loans are held by those with no household wealth at all. It's also why 86% of Black students take out federal student loans to attend college compared to 68% of white students. 20 years down the road, you see the huge difference. Mr. Pierce, I've also heard criticisms that there would be a massive backlash to debt cancellation from folks who paid off their loans and folks who didn't go to college. Have you seen evidence to support this claim that there'd be this huge backlash?
No, Senator. And in fact, polling that we released just this morning with Data for Progress finds the opposite is true. Large majorities, by a nearly 2-to-1 margin, support action by Joe Biden to cancel student debt, including 53% of people without debt and 57% of people that didn't go to college.
And would folks who do not need student debt cancellation or who didn't attend college, would they also benefit from student debt cancellations?
Absolutely. We would have a more robust and more vibrant economy. People would be able to buy goods and services, buy homes, move up in the world, and everybody benefits when people that have student debt now finally have financial freedom.
Yeah. Well, thank you so much. I think that student debt cancellation is the right thing to do right now, and it's the smart thing to do. And it's just good public policy. Too many of our children have a mortgage before they have a mortgage. And it's a scar on the conscience of our country.
Back to people showing.
And I think it's actually holding our economy back. We need to increase home ownership, the entrepreneurial vision. And one thing we can do right now is cancel student debt in a way that will actually be significant and transformational. And I hope we can get this done sooner than later. Thank you so very much.
Thanks, Senator Warnock. Senator Daines from Montana is recognized.
Chairman, thank you. I'm going to cut to the chase. I believe President Biden's misguided student loan policies are simply unfair. Let's think about somebody who decided not to go to college. In fact, we're seeing more Americans deciding not to go to college, perhaps to go to trade schools, to find a trade that they can enjoy and immediately get a good paying job. What about those who worked around the clock to pay off their debts? Should these individuals be responsible for paying off the student loans for a lawyer or a lobbyist? The answer is no, they shouldn't. In fact, those who would actually benefit the most from Biden and the Democrat student loan policy are those who choose to pursue advanced degrees and are often making a high income already. What Biden and the Democrats are trying to do is push yet another one of these socialist schemes cooked up by the far left that will expand the government, balloon the deficit, worsen the already out-of-control inflation crisis that's hitting the pocketbooks of the American people and Montanans. It does nothing to address the root issue of ballooning tuition costs. Listen, I got a student loan. I've got a chemical engineering degree at Montana State University. I got a student loan. I paid it off. In fact, this may actually encourage colleges and universities to increase costs because, at some point they've got to be thinking to themselves, why not? The federal government will come right back and do it again. So turning to my questions. Dr. McCluskey, it's a big deal when someone makes their final student loan payment, especially years after hard work. Is it fair for them and to them for the federal government to bail out somebody who knowingly took out student loans and accepted an obligation to repay them?
I think it's important to understand that the basic groundwork, the basic understanding of a loan is you will pay.
Could you turn on your mic?
I think that the baseline is when you take a loan, the expectation is you'll pay it off. And we have to remember that it's taxpayers who will end up paying the cost if these are not repaid, because having these debts repaid are built into the federal budget. There's an expectation that money will come in. And it is a major disincentive for people to look for the most efficient way to get the education, the skills and knowledge that they need. If they think, I can take a loan, I can buy more things at college that I like, and I won't be repaying it because the expectation is there'll be forgiveness. And it's important to understand there's actually research that shows, came out around 2015, I believe it's called College's Country Club, that other than people at the very top of academic levels, when they choose schools, choose it based on amenities. So it's not the academics, it's often the stuff, you know, the social life and things like that that go with college. So it's a very major concern when we don't have the people who are consuming the education be the ones who are primarily paying. And if we tell them we're going to forgive debt going forward, that is a great disincentive to think hard about what you're purchasing.
So let's think about somebody who chooses not to go to college. What does a universal action like this mean for people who choose not to go to college?
Well, so it incentivizes more and more people to go to college, and that fuels the credential inflation problem we've had, where increasingly we see employers requiring degrees for jobs that didn't previously require them. There was no evidence the job has changed in the demands. But you have this sort of very basic signal that may say somebody was able to finish what they started, but it's an extremely expensive way to get that signal, to go to college for 4 years to pay for it or to have taxpayers pay for it. And so it puts somebody who could more efficiently get those skills in a terrible bind where they end up feeling like I've got to go to college, even though it'll be expensive, even though it'll be 4 years that are not productively spent earning, and says, go do that. And it's very bad for them and the economy.
One of the single greatest challenges we face right now in this economy is we can't find enough people to fill the jobs that are currently available.
Mm-hmm.
I remember the years I was going to college, I actively pursued finding summer work so I could pay to go to college. I couldn't quite get it all. I had to get a small student loan to make it all work. But I think this is yet one more incentive that keeps people from getting out there and getting back in the workplace by forgiving these loans. I think it's a fundamental fairness question as well. Dr. McCluskey, have you studied the long-term impacts of student loan servicers exiting the federal loan servicing program since the payment pause was enacted during the pandemic?
I have not studied that.
What do you think the economic indicators need to be in order for the White House to end this moratorium? Any thoughts on that?
Well, I think it's now time to end it. The idea of the moratorium was that when we were entering the pandemic, we were entering economic lockdowns, it made sense to say, we're heading for a very bad time economically. It makes sense to pause repayment on these loans. We exited that at the beginning of the first quarter of 2021, and still we have this freeze. This should have been ended a long time ago.
All right, thank you.
Senator Daines, thank you. Senator Cortez Masto is recognized from Nevada.
Thank you, Mr. Chair. Thank you, the panel members, for being here. Mr. Pierce, as your testimony notes, recent Government Accountability Office report indicated approximately 94% of service members and civilian employees of the U.S. Department of Defense who previously applied for relief through the Public Service Loan Forgiveness Program have been denied. And then back in November of 2021, I because of this, wrote a letter to the Department of Education about their proposed changes to the PSLF program and the need for them to work to match data from the Defense Department to automatically count our military members' years in service towards the PSLF. I know you are tracking this data closely and the changes that are being made to the PSLF. What type of progress are we seeing on this, and do you have any concerns with what is happening so far?
Thank you for raising this really important issue, Senator. We have been watching closely to see how our men and women in uniform benefit from this initiative the Biden administration has rolled out that does make this simple promise not just to teachers and nurses, but also to service members, that if they serve in the military or work in other public service for a decade, they have a right under federal law to have their debt canceled. And just 124 service members in the first decade and change of this program ever had their debts canceled. And the Biden administration has made some progress. A recent Washington Post report uncovered that about 1,500 service members have had their debt canceled, but that's out of hundreds of thousands of people that are potentially eligible. And as best as we can tell, based on what's public, The government has yet to actually deliver on that promise to match data with the Department of Defense and to automatically cancel debt for every eligible service member.
Well, yeah, and the same GAO report notes that the Defense Department says that the poor public perception around the PSLF's implementations issues have led the department to not market it for recruitment and retention purposes. It really speaks to the importance of fixing this program. And thank you again for highlighting this and continuing with me and others to address these concerns. Let me jump to the panel in general on income-driven repayment communication. In March of this year, the GAO released a report that looked at the gaps in income-driven repayment plans. IDR plans offer the promise of forgiveness to eligible borrowers with student loan debt after 20 to 25 years of repayment based on income. But the report found that major gaps in communication from the department and its loan servicers regarding communication to borrowers about progress towards forgiveness and payment tracking. So I understand the administration has recently taken some positive steps in this area, but is there anything Congress should be doing to provide a statutory requirement about proper communication to borrowers? And Mr. Bishop, let me start with you.
So I think when we think about the income-based repayment plans, we should understand that we're at the point now where we have tried several different types of plans. We are currently, as we speak, the Department of Ed is preparing to roll out another plan. And we have to really learn from the mistakes around not only miscommunication, but making plans that are just simply paperwork written and complicated. So as we're thinking about communication and how to make sure borrowers understand the options are there, we have to also make sure that the plans are actually designed in a way that are streamlined for borrowers to get the benefits that they deserve. So instead of waiting to the end of 10 or 20 to 25 years to offer benefits, that's something that can happen as borrowers are making progress, particularly our borrowers in the public service program. I think there's also an opportunity here for us to think about what stronger accountability policies can we have for loan servicers so that we're not waiting years and having to go through lawsuits to actually get any level of accountability for loan servicers who just simply aren't doing accurate information because it takes more time, and time for them is more money.
Mr. McCluskey?
Yeah, I think that the most important thing going forward is to simplify income-driven repayment. There are multiple ways to enter income-driven repayment. It's very confusing what all the different programs are because you have pay, repay, IDR, IBR, lots of different acronyms that people are told. And it's because it's been an evolution simply over decades of always adding new programs instead of saying, wait a minute, this has become sort of an inscrutable mess to most people. Let's go to one income-driven repayment plan and make very clear what it is and who it applies to. The good news is we've moved away largely from FEL. There's still a few FEL debts left. The difference between FEL and direct loans confused a lot of people with repayment. And so making it as simple as possible is key.
Thank you. Mr. Pierce.
I agree with everything that my colleagues both just said, but I would add one other point. It shouldn't require an act of Congress to fix this mess. Joe Biden has the ability to cancel student debt for everybody, but he can also rewrite the rules for these income-driven repayment plans so that we're just making a better deal for folks. If one option is the best option and the best option for everybody, we have simplified the student loan system, and we've managed to do that in a way that actually does uplift people's financial lives.
Thank you. Thank you, Mr. Chair.
Cortez Masto. We will begin a second round. I will ask a couple of questions, maybe not the whole 5 minutes, we'll see. This question for both Dr. Bishop and Mr. Pierce. The administration's changes to IDR and the temporary PSLF waiver are good first steps to ensuring more borrowers get the forgiveness that Congress has promised. However, as two borrowers at our Dignity of Work listening session on Tuesday discussed, the application process is still hard to navigate. Cancellation's not guaranteed. So, Professor Bishop, you'd start, and then Mr. Pierce. What would the economic impact of meaningful debt cancellation be on low-income and minority borrowers?
So I think that this is an opportunity, at least in my lifetime, but maybe really the first time in history, for the federal government to see what is a debt trap, a race-driven debt trap, and eradicate it for communities in color. So this is opportunity not to wait till decades later, not to wait until we can really document the devastation and give an apology, but actually do something material right now with action steps that can bring about justice. So I think this is a historic moment, a moment to think about working class people and communities of color. And we have abilities and legal authority to do things now through the executive branch that, again, gives us a moment not to wait later on where we have to apologize and tell communities of color we got it wrong when we have right now the opportunity to get it right.
Thank you. Mr. Pierce, answer that, but I want to throw another question on top of it and do that together. How does CFPB ensure the servicers follow these recent changes to the program so that borrowers are able to actually access the debt cancellation that they've earned?
So to answer your first question, I'm also going to point to the polling we released this morning with Data for Progress that shows that if we don't act now, if payments do start again at the end of August, 40% of people are going to struggle to afford basic needs like shelter and food. And 6 in 10 people are going to make major changes to saving and spending. So I think it's important to recognize the financial freedom that canceling student debt will provide people, but also the enormous negative effects on households from throwing them back into this deeply broken student loan system. And the CFPB is a really important part of the solution here. So these big private sector student loan companies that choose to bid for government contracts and choose to do this work on behalf of taxpayers routinely break the law. And the CFPB is there to provide regular, routine oversight. Student loan servicing should be boring. You shouldn't have to know who your student loan servicer is. You shouldn't care what they do every day. It should just work. And the CFPB providing regular oversight is the key to making that happen for people.
So this is the CFPB communicating with the Department of Education, making sure they coordinate notifying borrowers who may have been high risk or been misled.
Absolutely.
Correct?
Yeah.
Okay, thank you. Senator Toomey.
Thanks, Mr. Chairman. Senator Tester made the point that college is just too expensive. And I have to say I agree with that. But I think we ought to be looking at one of the major drivers that we discussed a little bit earlier, government subsidy. This is not even controversial among economists, that the level of government subsidy is a big driver of the fact that higher education prices have escalated much faster than the general price level throughout the economy. Dr. Bishop made I think, a valid point, which was that we subsidize college education through our tax code because we allow people to save for college and the growth and the value of their savings is not taxed. That is true. Frankly, I'd support eliminating that. If we took the savings and used it to lower marginal tax rates across the board, that would be more fair. That would be non-discriminatory. That would be pro-growth. But the current policy is regressive in that sense. But what's amazing is loan cancellation is much more regressive. So let me ask a couple of questions of Dr. McCluskey. First of all, let's just state the obvious here. What percentage of people who take on student debt are forced to do so versus what percentage voluntarily choose to borrow the money to pay for college?
Well, it's difficult to say forced versus voluntary because some people may feel forced because student aid has fueled price increases. So it's, I think, legitimate to say we have a problem with student loans and lots of the other programs like you mentioned that put the thumb on the scale to consume higher education.
Okay, but I have to disagree that it's hard to make this. Of course it's voluntary. Nobody is compelled to take out a student loan. People do it because they think it's in their interest to do so. Right. And it's a completely voluntary transaction. But to go to this question of how regressive this is, the data that I have suggests that over half of all student loan debt is held by graduate students. Is that your understanding?
Yes. So the skew of student debt is absolutely right. Nobody is required to take on student debt, and people take it on because it greatly increases your chances of much higher lifetime earnings. And graduate school in particular does that, especially
even
professional
more so.
school.
Right. So the data that I've seen is that on average, Americans with a college degree earn $1 million more over their lifetime than people without a college degree. So my last question is, tell me if you're aware of any data that contradicts this. According to the University of Chicago economist studies, they estimate that 2/3 of the benefits of full debt cancellation would be captured by the top 50% of income earners. The top 50% of income earners, those by definition are not extremely poor people. That's where this benefit would go. How is this not extremely regressive?
Right, and I haven't seen evidence that says that that is not accurate. The top decile in income earners have $46,700 of those who borrowed. The lowest quartile is $26,000. So what we're looking at is certainly there are a lot of low-income people who would get a fair amount from forgiveness, but most of it is skewed toward people who have done things like gone to medical school, become doctors, and those professional degrees, you get about $3.1 million more over your lifetime than someone who hasn't gone to college, that finished in high school. Of course, if you're going to get that payoff, you should be responsible for paying it, not taxpayers.
Thank you, Mr. Chairman.
Thank you, Senator Toomey. Senator Warren is recognized.
Thank you, Mr. Chairman. I appreciate an opportunity to keep asking some more questions about this. So President Biden is considering canceling student loan debt for tens of millions of Americans, and Republicans are attacking the idea because they don't want the president to get credit for helping working families that need help. So one of the arguments they've been making is that canceling student loan debt will somehow make inflation worse. So that's the question I want to pursue in this round. Republicans' arguments, I think, here are completely out of step with reality. When the pandemic hit 2 years ago, President Trump halted all student loan payments, and they've been paused ever since then. In other words, the federal government has already been effectively canceling every month of student loan payments for more than 2 years. Now, Mr. Pierce, you're an expert on student debt and its impact on borrowers and the economy, so let me ask you, what does the data show about how 2 years of student loan cancellation has impacted inflation?
Thank you for the question, Senator Warren. And I actually want to cite the same conservative think tank, the Center for Responsible Federal Budget, that Senator Toomey cited in his opening remarks, noting that it is putting billions of dollars back in borrowers' pockets, but that is just a few $billion in a many $trillion-dollar economy. It has not, the same analysis shows that it has not contributed substantially to inflation. And in fact, it's just driving 0.02% of inflation. That is 1/4 of 1/10 of all inflation in America. The White House actually puts that estimate even lower. And 97% of all inflation is due to other causes, like the war in Ukraine, problems with the supply chain, and most importantly, greed by mega corporations that are profiteering off of the pandemic.
Okay, so even the most conservative think tanks say about, is it 0.2% of inflation may have been affected?
That's right.
Let's unpack that a little bit. Because according to the New York Fed, the payment pause has saved borrowers $84 billion a year. $84 billion for 2 years sounds like a lot of money to most people, including me. And you're saying that even so, it only contributed 0.2 percentage point to the rate of inflation. So why is it that $84 billion a year isn't adding more inflation?
That's because, and again, I'm citing a conservative think tank here.
Got it.
That's because we have a multi-trillion-dollar economy that's driven by consumer spending. Mm-hmm. And this billions of dollars in relief, it's life-changing for the families that benefit from it, but it's just a drop in the bucket for the economy.
Okay, so let me see if I've got this straight. Republicans' so-called solution to rising prices is to tell hardworking families that they need to start writing checks for hundreds or thousands of dollars a month to the federal government. You know, that's not just a slap in the face to borrowers who are barely getting by right now. It also would have virtually no impact on inflation. But let's talk about what cancellation of student loan debt would do for the economy. Mr. Pierce, what impact would meaningful student debt cancellation have on families, pocketbooks, and the broader economy?
So, as you mentioned, we have canceled student loan payments for 2 years. Yeah. And research that we published with the California Policy Lab and our Student Loan Law Initiative at University of California, Irvine, found that the average family saves $200 a month. 43% of those borrowers have used that to pay down high-cost credit card debt. And the borrowers with the worst credit, with the weakest credit going into the pandemic, have experienced the biggest gains. So this is progressive policy and is a breath of fresh air for people that have struggled for too long.
Right. And for people who are now getting rid of the long-term principal, what does this mean for their lives? What can they now do?
This will expand opportunities for homeownership. It'll make a generation of renters turn into a generation of homeowners. It'll help people save for retirement, and it will help fight the plague of intergenerational student debt. It will free up people's money to help the next generation pay for college.
So a lot of opportunity, a lot of long-term stability for families. You know, this would be real money in the pockets of American families who are struggling to pay their bills right now. And let's be clear about what's happening here. Republicans are desperate to stop the president from doing something that would help working families. So desperate that they are peddling lies about how student loan debt cancellation would impact our economy. Here are the facts. Canceling student debt would unlock opportunities for Americans across the country. It is a crucial step in reforming the broken student loan system, and it would not inflate the economy. It would make it stronger for years to come. The president needs to provide meaningful student debt cancellation for hardworking families, and he needs to do it now. Thank you for being with us.
Thanks, Senator Warren. Senator Reed from Rhode Island is recognized.
Thank you very much, Mr. Chairman. Secretary Donor, when he assumed office, described the preceding years of administrative failures in terms of the programs. One of them is the failure of the department and its services to perform the most basic function, keeping track of borrowers' payments. So, Mr. Pierce, what steps should Congress take to reform just the administrative aspects of the student loan program?
There are a number of steps that Congress can take. Congress can restore bankruptcy rights to student loan borrowers. Congress can help clean up big pieces of the student loan system, and Congress can make college free. But the good news for student loan borrowers is that Congress doesn't need to act to rein in abuses by predatory student loan companies. The Biden administration has all the tools and all the legal authority it needs, working both with the Department of Education and the Consumer Financial Protection Bureau to clean up this mess.
Thank you. Another aspect, as we emerge from COVID, as we are moving forward, is providing sort of incentives to the lenders so that they are much more sensitive to the students they're teaching, the courses they're teaching, and everything else. I've been proposing for many years a risk-sharing provision that institutions of learning that have very high default rates should share the default with the U.S. government. And I think they'll have several effects. One is to ensure that their courses prepare people adequately for work and repayment, and also that they don't simply use the loan program as a money machine. So how do you feel about that, Mr. Pierce?
That would be an enormous step forward. There are unaccountable schools, particularly but not exclusively for-profit colleges, that have profiteered off of the federal student loan system for decades and have driven student loan defaults. Enrollment in those for-profit colleges are roughly 1 in 10 of America's students, but it's 1 in 5 borrowers and more than 1/3 of all student loan defaults, and taxpayers are left holding the bag.
So that seems to be a very simple market-driven approach to fixing a problem that's quite obvious. Is that your opinion?
I would agree with that.
Yeah. That's the final question, is that we are looking at cutting back on federal lending and federal support, which may in fact just drive people into the private sector. And as we've just talked about it, there are some activities from the private sector that are not particularly consumer friendly. Because we could creating a bigger problem, i.e. the need to borrow money for school will not go away. If the federal government leaves, now you're at the hands of private operators, some whom are very credible and very thoughtful, but many others who are looking at it strictly as a way to make money, not to enhance the productivity and the life of American people.
Absolutely. And as I noted in my written testimony, there has been a number of scandals between Wall Street and Silicon Valley over the course of decades that show when students depend on the private sector as their sole source of financing in particular, things often go off the rails because these loans are designed to fail. We saw a decade ago with some of the collapses of the large for-profit colleges that they had designed their own private lending scheme and told investors that they expected 6 out of every 10 borrowers that took a private student loan to fail, but that was okay because as long as they could use those private loans to be able to get access to federal student loans, everyone would come out ahead, everyone but their students.
Thank you very much. Thank you, Mr. Chairman.
Senator Reed. Senator Cortez Masto.
Thank you. First of all, let me just say thank you for this great conversation today. This is the same debate that is happening in my state right now. And I think every question that has been asked by the senators and the comments, thank you. This is indicative of what we are dealing with. But to the panel members, and let me start with Mr. Pierce. I was listening to Senator Daines' comments because this is something I do here in my state. Is I paid for my student loans. I worked hard. I worked a second job. Mr. McCluskey said, people should be responsible. You take out a loan, you should be responsible. I did it. Why shouldn't everybody else have to do it and not get that forgiveness? What's your response to that? If you're talking to people in my state and across the country that feel the same way, what's the response to that and why there should be some sort of forgiveness?
Thank you, Senator. And I think to start, student loans aren't like car loans and mortgages. And for millions of people that have these loans, the rules were rewritten after they took on these debts. For many people who have low incomes, they were told to raise their hand and take advantage of the options that their student loan servicer would tell them about. And when they picked up the phone and they called for help, they were misled. And as a result, their loan balances grew. The debts they owe now are far greater than when they first attended college. That is particularly true for Black borrowers. This is not just an issue about people getting free stuff from the government. This is about justice and it's about equity. And I don't think any place in America people believe that predatory lenders should be able to get off scot-free. In this case, the government is a predatory lender.
Mr. Bishop?
I mean, I would second all that Mike Pierce shared, and I think that the other way for us to think about this is that when students come to borrow student loans, because of the lack of information, the constant change in rules, the constant change in price for college education, it's impossible to come in your first year and really determine how much you're going to borrow for the cost of that college. That by the time you get to your third or fourth year, your cost of attendance may have increased dramatically. And even with your best personal responsibility, your best personal budgeting, it was nothing you could do to anticipate or prepare for that increase. But you're in your third or fourth year and you have to continue to borrow or you won't get that college degree and be in a worse spot where you have student debt and no degree. So a part of this too is understanding that there's a larger system at play here outside of just personal responsibility that is often leading to the debt situations and the crisis that we're seeing right now.
Thank you. And Mr. McCluskey, you believe it's true there are predatory lenders out there?
Well, at this point, the overwhelming lender is the federal government. There has been a problem in which federal loans will, if you want a federal loan, there's essentially no assessment of what it is you want to study, where you want to go study it. If this were a private loan, you probably wouldn't see that because there's risk to that lender. For the federal government, it's really risk to the taxpayer. So you might say that the federal government has been predatory, except that's not the goal. The goal has been to give people money to go to college, but we haven't looked at all the unintended consequences of that, which includes massive tuition inflation. It includes massive credential inflation. But what we have to remember, I think, is that ultimately left holding the bag are taxpayers who didn't have a say in any of those given loans. And as bad as the situation is with federal student aid and student loans, which I think need to be reformed, the reality is about 2/3 of American taxpayers don't have a bachelor's degree. And people who do have a bachelor's degree on average earn $1.2 million more over their lifetime than someone with just a high school diploma. If you go to professional school, you make $3.1 million more. Those people, the baseline should be they repay those taxpayers who had really no say in any given loan and really didn't have any direct say in how the system was set up.
Let me tell you about an unintended consequence that I have concerns about. In the state of Nevada, we lack general practitioners, physicians. One of the things, as I've done my roundtable discussion with our doctors throughout the years, I have learned is that because the student loans are so high as a doctor, many graduate, don't become a general practitioner because it doesn't pay enough to be able to pay your student loans, so they go into specialty care. And so now we are seeing choices being made by individuals, particularly, this is true, listen, for attorneys and others, and I'm not defending, I'm only telling you what I am hearing. Choices are being made when in actuality, it would be much better in my state to have more general practitioners, including in our rural communities. And we have incentivized in Congress the ability to get more doctors in our rural communities by waiving their debt. And so I do think there are unintended consequences that we have to be dealing with when we're talking about services to taxpayers that need it, particularly around healthcare and other needs. And I think this is a complex issue, but we should be thinking about all of the above as well. So I thank you again for the conversation.
Thank you, Senator Cortez Masto. Thanks to the witnesses, all three of you, for providing testimony. I'd like to submit for the record testimony of Jonathan Hammond of Massachusetts, who took on student debt to attend a for-profit coding boot camp. Instead of learning useful skills, he got just stuck with the $10,000 loan without objection, so ordered. Also like to submit for the record the testimonies of Ray Pickett, Morgan Bailey, Emily Robinson, and Deborah Harberger. They were in our Dignity of Work listening session on Tuesday without objection. Their stories describing their struggle with student debt while raising families, going to school, serving the public are exactly the reason the administration should cancel a meaningful amount of student debt. They should be part of, and they should be part of the official record of today's hearing. For senators who wish to submit questions to the three of you, those questions are due 1 week from today, Thursday the 12th. To the witnesses, please submit your answers to these questions for the record within 45 days of receipt. Thank you again. The committee is adjourned. See you. All right, see you.